The clock is ticking toward 2140, the year of Bitcoin's very last halving. This final halving will push Bitcoin's scarcity to the ultimate level, transforming its supply, its rewards, and potentially its value forever. What does this historic event mean for Bitcoin, its miners, and the world of crypto? Hey everyone, Kelvin here. Today, we're talking about Bitcoin's last halving in 2140. This isn't just another halving, it's the final one. This event will bring Bitcoin's supply almost to its limit and will be a turning point for how miners, investors, and the entire crypto world see Bitcoin. Let's break down what this means, why it matters, and how it could shape the future of cryptocurrency. Understanding Bitcoin halving. So, before we get into what's coming in 2140, let's talk about what a Bitcoin halving actually is. In simple terms, Bitcoin halvings are built-in events that happen roughly every 4 years, cutting the reward for mining new blocks in half. This means that every 4 years, the number of new Bitcoins entering circulation is reduced by 50%. This process of cutting the supply of new Bitcoins is part of what makes Bitcoin unique. Bitcoin was designed to have a limited supply, 21 million coins to be exact. By halving the mining reward, Bitcoin's supply is gradually reduced, creating a sense of scarcity that many believe is a major reason behind Bitcoin's value. Previous halvings have driven interest, speculation, and even price surges because each halving event means fewer new coins are entering the market. The purpose of these halvings is to keep Bitcoin's supply limited and predictable, similar to precious metals like gold. And in 2140, we'll reach the final halving, taking the mining reward to a fraction of what it is today. This event will set Bitcoin on a new course that could redefine its place in the world of finance. The history of Bitcoin halvings and their impact. To understand the significance of the 2140 halving, let's take a quick look at the impact of past halving events. Bitcoin's first halving happened on the 28th of November in 2012, and it cut the mining reward from 50 BTC per block down to 25 BTC. This halving was followed by a sharp increase in Bitcoin's price, drawing attention from early adopters and investors. The second halving in 2016 reduced the reward again, this time from 25 BTC to 12.5 BTC. Once again, Bitcoin's price experienced a surge over the following months, reaching new highs. The third halving took place in 2020, and Bitcoin's price went on to hit record levels above $60,000. Now, not every price increase can be directly linked to these halvings, but there's a clear pattern. Each halving has tended to create excitement, decrease the available supply, and increase demand. Investors often anticipate that fewer new coins will drive up prices, leading to rallies and higher levels of interest in Bitcoin. However, what makes the 2140 halving so different is that it will be the final one. This halving will reduce the block reward to almost zero, which will have major implications for how Bitcoin's network operates. The final halving. What changes for miners? So, what happens when there are no more significant block rewards for Bitcoin miners? Miners play a vital role in the Bitcoin network. They validate transactions, maintain security, and ensure that the blockchain is running smoothly. Currently, they're rewarded for their work through block rewards, newly minted Bitcoin that's added to the supply. In 2140, when the last halving takes place, the block reward will drop to a fraction of 1 Bitcoin, nearly zero. At this point, miners won't rely on new Bitcoin being created. Instead, they'll depend almost entirely on transaction fees from users. This shift could have a big impact on the mining industry. Today, miners need both block rewards and transaction fees to cover the costs of electricity, equipment, and other resources. By 2140, miners will have to adapt to a model where transaction fees are their main source of income. This means that if transaction fees aren't high enough to cover these costs, we could see some miners leave the industry. This could also lead to consolidation, where only the most efficient and low-cost miners are able to survive. And if the number of miners decreases significantly, there could be concerns about the network's security and decentralization. The fewer miners there are, the more centralized and potentially vulnerable the network could become. What this means for Bitcoin's value. Now, let's talk about what the final halving could mean for Bitcoin's value. Many believe that Bitcoin's scarcity is one of the main drivers of its price. The idea is simple. When there's less of something available, its value tends to go up, especially if demand remains high. By 2140, Bitcoin's supply will be almost fully tapped out. With virtually no new Bitcoins entering circulation, the market will rely on existing coins. If Bitcoin has solidified its role as a store of value or digital gold by then, we might see a surge in demand as more people and institutions want to hold on to a piece of this limited asset. However, it's also possible that by 2140, Bitcoin's scarcity will already be priced in. Investors might have already accounted for this supply cap in their valuations, leading to a more stable, less volatile Bitcoin. But if demand continues to grow and Bitcoin gains wider acceptance as an asset, its price could still rise, making the final halving a potentially pivotal moment for long-term value. Bitcoin's role as digital gold in 2140. By 2140, Bitcoin's reputation as digital gold may be stronger than ever. With a fixed supply and decentralized nature, Bitcoin is often seen as a hedge against inflation and a store of value. In a world where traditional currencies are still susceptible to inflation and government policies, Bitcoin's fixed supply could make it increasingly attractive to institutions, governments, and individuals alike. The final halving in 2140 will emphasize this narrative even further, potentially solidifying Bitcoin's position as a safe haven asset. If Bitcoin is widely adopted as a reserve asset, it could play a unique role in global finance, with investors and institutions holding it as a hedge against traditional financial uncertainty. Transaction fees as the new incentive for miners. As we mentioned, the final halving will leave miners with transaction fees as their main incentive. This shift could make transaction fees more significant in the Bitcoin network, as miners will need these fees to stay profitable. For Bitcoin users, this might mean higher transaction fees, especially during periods of high demand. This shift could affect Bitcoin's use as a daily transaction tool, pushing it further toward the store of value role, similar to gold, rather than a currency for everyday purchases. However, second-layer solutions like the Lightning Network could help offset this issue by allowing faster and cheaper transactions, reducing the load on the main blockchain. These solutions may play a vital role in ensuring that Bitcoin remains accessible and affordable for daily use, even when transaction fees increase. Could the final halving spark new innovations? The 2140 halving may encourage new innovations in Bitcoin's ecosystem. As miners adapt to a transaction fee-based model, there may be an increased focus on technologies that make Bitcoin more efficient. Innovations in mining efficiency and sustainable energy use could help miners reduce costs, ensuring that the network remains decentralized and secure. Additionally, second-layer technologies like the Lightning Network could see more development and adoption, helping to handle the transaction volume and keep fees manageable. The final halving might be a catalyst for progress, driving the community to find new ways to make Bitcoin sustainable over the long term. The impact on the broader crypto market. Bitcoin's last halving in 2140 won't just affect Bitcoin. It could have a ripple effect on the broader crypto market. As Bitcoin's scarcity and role as a store of value are emphasized, other cryptocurrencies might emerge as alternative transaction networks or platforms for innovation. If Bitcoin becomes more of a reserve asset, other projects focusing on different applications, like smart contracts, decentralized finance, or fast transactions, might see increased interest. But with its established status, Bitcoin's role as a cornerstone of the crypto market is likely to stay strong, influencing market trends and investor sentiment well beyond 2140. Conclusion. The 2140 halving will be a landmark event, marking the end of an era in Bitcoin's history. This final halving will redefine Bitcoin's economics, potentially impacting its value, its use, and its role in the global financial system. As Bitcoin reaches maximum scarcity, the crypto world will be watching closely to see how this ultimate milestone shapes the future. Thanks for tuning in. If you enjoyed this video, be sure to like, subscribe, and hit that notification bell for more insights on Bitcoin and the future of crypto. Until next time, keep exploring the possibilities of this incredible technology.